Picture this. You're 40 years old, sitting in your home office, and you just checked your investment account. The number on the screen makes you do a double take. 6 figures, maybe 7. Money you didn't actively work for this month just appeared from dividends, interest, capital gains. Your net worth has quietly grown more in the last year than you earned in salary during your entire 20s. And suddenly it hits you. Everything has changed. The game is completely different now. You're not just working for money anymore, money is working for you. I'm Max, and today we're diving into the financial transformation that happens after 40 that nobody prepared you for. This isn't about struggling or surviving. This is about the moment when decades of grinding, saving, and investing finally pay off in ways that feel almost surreal. When compound interest stops being a concept in a textbook and becomes your personal wealth-building machine. When your net worth starts growing faster than you can spend it. When financial stress gets replaced by financial abundance that your younger self could never have imagined. By the end of this video, you'll understand exactly why your 40s are when wealth actually gets built, why the money you make from your investments starts dwarfing your salary, and why people who've been strategic for 20 years suddenly find themselves in a completely different financial universe than their peers. This is the decade when everything you've been building finally comes together. Let's break it down. Compound interest finally becomes real. Here's what nobody tells you about compound interest when you're 25. It sounds great in theory. You hear the stories about how investing early pays off. You see the charts showing exponential growth curves. But it doesn't feel real because the numbers are still small. You invest $1,000 and a year later it's worth $1,070. Wow, $70. You can barely buy dinner with that. But by 40? Holy hell, everything changes. Because you've been investing for 15, maybe 20 years. And compound interest doesn't work in a linear way. It works exponentially. Those early years where you felt like nothing was happening, that was your money building a foundation. Now you're watching that foundation turn into a skyscraper right before your eyes. Let's run the actual numbers, because this is where it gets insane. Say you started investing $500 a month at age 25. For the first 5 years, you're just accumulating principal. You've put in $30,000, and with a 7% average return, you've got maybe $35,000. You're looking at that thinking the stock market is overrated. $5,000 in gains over 5 years feels pathetic. But you keep going. By age 35, you've invested $60,000 total, and your account is worth around $87,000. Okay, that's better. $27,000 in gains, starting to feel worthwhile. But you're still not wealthy. You're still grinding at your job, still living paycheck to paycheck even though you're being responsible. Then 40 hits. You've now invested $90,000 of your own money over 15 years. But your account isn't worth $90,000. It's worth $157,000. You've gained $67,000 just from growth. And here's where it gets crazy. In year 16, that account grows by over $11,000. You contributed $6,000 that year, but the market gave you $11,000. Your money made almost double what you put in. By 45, you've contributed $120,000 total, but your account is worth $246,000. By 50, you've put in $150,000, but you're sitting on $381,000. Your gains now dwarf your contributions. You're watching your net worth increase by $30,000, $40,000, $50,000 per year without you doing anything except staying invested. This is the compound interest inflection point. This is when your money starts working harder than you do. And it happens right around 40 for people who started investing in their 20s. Everything you struggled through in your younger years, all those times you wanted to pull money out for a vacation or a car, all that discipline finally pays off in a massive way. Your income finally matches your experience. But it's not just your investments exploding. Your actual earned income after 40 is at levels your younger self couldn't comprehend, because you've spent 2 decades building expertise, reputation, and connections, and the market rewards that massively. When you're in your 20s, you're learning, you're making mistakes, you're figuring out how things work. Companies pay you accordingly. You're cheap labor, replaceable, When you're in your 30s, you're competent. You can execute. You deliver results. You start making decent money, but you're still not at the top of the pay scale. After 40, you're the expert, the specialist, the person who's seen every scenario and knows how to handle it, and companies will pay absolutely stupid amounts of money for that level of expertise. We're talking about salary jumps that seem impossible when you're younger. That marketing manager making $65,000 at 28? At 42, she's a VP of marketing making $180,000 plus bonuses and stock options. That software engineer making $85,000 at 30? At 45, he's a senior architect pulling in $250,000. That accountant making $55,000 at 26. At 43, she's a controller making $160,000. And this isn't just about climbing the corporate ladder. This is about the value you bring. You're not just executing tasks anymore. You're making decisions that impact millions of dollars in revenue. You're mentoring entire teams. You're the person who prevents disasters before they happen because you've seen those disasters before. That's incredibly valuable, and the market knows it. But here's what makes this decade special. You're not just making more money. You're making more money while your living expenses have stabilized. When you were 28 and got a raise, you immediately upgraded your apartment, bought a nicer car, started eating out more. Lifestyle inflation ate every dollar. At 42, when you get a raise, that money goes straight into investments. Because your life is already established. You already have the house, the cars, the stuff. You're not trying to impress anyone anymore. You're not keeping up with anyone. You're just stacking cash and building wealth at a rate that would have blown your mind 15 years ago. Multiple income streams start compounding. Here's where people after 40 completely separate themselves from people who are still young and broke. Multiple income streams. Because by 40, if you've been even remotely strategic, you're not just relying on a salary anymore. You've built a portfolio of income sources that all feed into your wealth-building machine. You've got your primary job income, that's the foundation. But then you've got dividend income from your investment portfolio. If you've got $200,000 invested in dividend stocks yielding 3%, that's $6,000 a year you didn't have to work for. Not huge by itself, but it's there. And it grows every year as you invest more and as companies increase their dividends. You've got rental income if you bought investment property in your 30s. That house you bought for $180,000 15 years ago, it's worth $380,000 now, and the tenants are paying down your mortgage while giving you $800 a month in cash flow. That's almost $10,000 a year in passive income plus the equity building plus the appreciation. You've got side business income from consulting or freelancing. Because after 20 years in an industry, you have expertise people will pay for. You can charge $200, $300, $500 an hour for consulting work. Even if you only do 10 hours a month, that's an extra $30,000 to $60,000 a year. You've got interest income from bonds or high-yield savings. You've got capital gains from selling investments strategically. You might have royalties if you created intellectual property. You might have affiliate income if you built an online presence. You might have a small business you started that runs semi-passively. The point is, your income isn't dependent on just one source anymore. And this is huge because it means you're not vulnerable. If you lose your job, you've got other income covering your basics. If the market crashes and your portfolio takes a hit, you've still got your salary. You've diversified your income the same way you diversified your investments. And all these streams feed into each other. Your salary funds your investments. Your investments generate dividends that buy more investments. Your rental income pays down mortgages faster, which increases equity, which increases net worth. Your side income gets invested, which compounds, which generates more passive income. It's a beautiful self-reinforcing cycle that accelerates wealth building exponentially. This is what wealthy people figured out early. You don't get rich from one income source. You get rich from building a system where multiple sources all work together to compound your wealth faster than any single stream could. Your network finally pays dividends. Let's talk about something that doesn't show up on a balance sheet, but is worth more than most people's investment portfolios: your network. the relationships you've built over 20 years of working. And after 40, that network becomes a wealth-generating machine. When you're young, networking feels transactional and awkward. You go to events, exchange business cards, connect on LinkedIn, and nothing happens. You don't have enough experience to offer real value. You don't have enough credibility for people to take you seriously. Your network is shallow. By 40, everything changes. You've worked with hundreds of people. You've built genuine relationships based on delivering results together. You've helped people succeed. You've solved problems. You've proven yourself over and over, and now those people are in positions of power. They're VPs, directors, founders, executives, and they remember you. This is when the opportunities start flowing. A former colleague who's now a VP at another company calls you about a position that pays $40,000 more than you're making now. A client from 5 years ago reaches out about a consulting project worth $50,000. A connection from a previous job wants you to join their startup as an advisor with equity that could be worth millions if it exits. You stop looking for opportunities. Opportunities find you because you have a reputation. People know what you're capable of, they trust you, they want to work with you, and they're willing to pay premium prices for access to your expertise and your network. But it goes beyond just job opportunities. Your network gives you deal flow. Your buddy who's a real estate investor tells you about an off-market property before it's listed. Your former coworker who's a financial advisor gives you insights on market opportunities. Your college friend who started a company offers you a chance to invest in their Series A at terms that would never be available to the public. The deals that create generational wealth rarely come from public markets or listings. They come from private networks. And by 40, if you've been building relationships strategically, you're finally inside those networks where the real money gets made. Your risk tolerance becomes calibrated perfectly. Here's something counterintuitive. After 40, you're actually better at taking financial risks than you were when you were younger. Not because you're more reckless, because you're more calculated. You understand risk in a way you couldn't when you were 25. When you're young and broke, every financial decision feels like life or death. Investing $10,000 feels terrifying because that's a huge percentage of your net worth. Starting a business feels impossible because you can't afford to fail. Taking a new job is scary because what if it doesn't work out? At 40, with a solid financial foundation, you can take bigger risks because you're not betting everything. You've got 6 months of expenses in savings. You've got an investment portfolio that could carry you for a year if needed. You've got equity in your home. You've got a network that could help you find a new job quickly if necessary. So when an opportunity comes up to invest $50,000 in a friend's business, you can actually evaluate it rationally. If it fails, it sucks, but it doesn't destroy you. If it succeeds and returns 5 times, you just made $200,000. The risk-reward ratio actually makes sense now because you have the capital to participate and the cushion to survive if it goes wrong. This is why many people start their most successful businesses in their 40s, not their 20s. Because they finally have the resources, experience, and financial security to take a real swing. They can invest in themselves, they can go 6 months without income while building something. They can hire help instead of doing everything themselves. Your younger self was too scared to take meaningful risks. Your 40-year-old self has the experience to identify good opportunities and the resources to capitalize on them. That combination is incredibly powerful for wealth building. The retirement math starts working in your favor. Let's talk about retirement, because this is where the math gets absolutely wild for people in their 40s who've been investing consistently. You start seeing retirement not as some distant fantasy, but as an actual achievable reality, and it happens faster than you think. Remember that example from earlier where you invested $500 a month starting at 25? By 50, you've got $381,000. Now let's say you're 45 with that $246,000 portfolio and you decide to get aggressive. You bump your monthly contribution to $1,500 because you're making way more money now than you were at 25. In just 5 years, from 45 to 50, your portfolio doesn't just grow by the $90,000 you contributed. It grows by 195,000 total because your existing balance is generating massive returns. You now have 441,000. Keep that pace for another 10 years. To age 60, and you're sitting on $1.1 million. That's enough to retire. The 4% rule says you can safely withdraw $44,000 a year from that portfolio indefinitely. Add Social Security and you're living comfortably without working. And if you keep pushing to 65, you've got 1.6 million generating $64,000 a year in safe withdrawal rates. This is the magic of your 40s and 50s. Your contributions are bigger because you're earning more. Your existing balance is massive, so the compound growth is explosive. And suddenly, retirement goes from maybe someday to definitely in 15 years. People who started investing at 25 and stayed consistent hit their 40s and realize they're actually going to make it. They're going to have enough. They might even retire early. And that realization changes everything about how you view work, money, and life. The freedom that wealth creates. But here's what all this actually means in practical terms. The freedom, the options, the complete transformation of how you live day to day. Because when you hit 40 with real wealth, with multiple income streams, with a portfolio that's compounding aggressively, with skills the market values highly, everything changes. You stop living paycheck to paycheck. You have 6 months of expenses and savings, then 12 months, then enough that you could take a year off if you wanted to. That eliminates stress in a way you can't fully appreciate until you experience it. You stop saying yes to things you don't want to do. That job you hate? You can quit because you've got options. That client who treats you like garbage? Fire them. You don't need them anymore. That project that sounds miserable? Pass. You're financially secure enough to be selective. You start spending money on what actually matters without guilt. Taking your family on incredible vacations, investing in experiences, helping your kids, supporting causes you care about. Not because you're rich and frivolous, but because you built wealth specifically so you could live this way. You stop worrying about money constantly, not because you're careless, but because you have systems. You have automated investments. You have multiple income streams. You have a financial plan that's working. Money becomes a tool you control instead of a master you serve. What this means for you right now. So here's the bottom line. Everything changes after 40 because that's when decades of work finally compound into real wealth. Your investments explode from compound interest hitting its inflection point. Your income peaks as the market rewards your expertise. Your network starts generating opportunities you couldn't access when you were younger. Your risk tolerance becomes calibrated perfectly to capture upside while protecting downside. Your multiple income streams create a self-reinforcing wealth-building system. But none of this happens by accident. The people experiencing this transformation are the ones who started investing in their 20s or early 30s and never stopped, who lived below their means even as their income increased, who built valuable skills instead of coasting, who cultivated relationships instead of burning bridges, who took calculated risks instead of playing it safe. If you're in your 20s or 30s watching this, understand that your 40s can be absolutely incredible financially, but only if you start building now. Every dollar you invest today will compound into amounts that will blow your mind 20 years from now. Every skill you develop will pay dividends for decades. Every relationship you build will open doors you can't see yet. If you're already in your 40s, you're either experiencing this wealth transformation or you're wondering why it hasn't happened for you yet. And the answer is probably that you didn't build the foundation in your 30s. But it's not too late. You can still invest aggressively for the next 15 years and retire comfortably. You can still build multiple income streams. You can still leverage your experience into higher income. You just need to start now and stay consistent. The wealth that gets built after 40 isn't luck. It's not inheritance. It's not timing the market perfectly. It's the inevitable result of compounding over time. Money compounding in investments, skills compounding into expertise, relationships compounding into networks, discipline compounding into habits. Your 20s are for learning and building foundation. Your 30s are for executing and accumulating. Your 40s are when all of that pays off in ways that transform your entire existence. This is when you stop feeling broke despite working hard. When you start feeling wealthy because your systems are working. When financial stress gets replaced by financial abundance. That's why everything changes after 40. Not because you get older, because you finally reach the point where time becomes your ally instead of your enemy. Where compound interest works for you instead of against you, where your wealth grows faster than you can spend it, where you transition from working for money to money working for you. And once you cross that threshold, you never go back. You're playing a completely different game now, a game you're actually winning. And that makes all the sacrifice, all the discipline, all the delayed gratification absolutely worth it.